Investing in stocks, bonds, EFTs are ways to put your money to work and potentially build wealth. But while investing makes you money, it also comes with the risk of losing some or all of your principal. Here to discuss how you can navigate market volatility is Peter Sashecki from Everything Financial. Good morning, Peter.
Good morning.
I mean, there's so much uncertainty in the world right now, so there's a lot to talk about here. But we're going to start with this morning's Bank of Canada interest rate cut. The market jumped ahead of that. So is it good or bad news for the markets and investors with this rate cut?
It's good news. I mean, anything that keeps the rates going down eventually works its way down to consumers and puts more money in people's pockets, decreases payments on debt, or allows them to pay debt off quicker because they're paying less interest. So it's a good thing when you see interest rates go down, and that should, again, put a little kick in the economy and help it a little bit.
Yeah, everyone has been sort of waiting for this, the sixth consecutive cut. Many investors are familiar with this term, market volatility. For those wondering, what does that mean exactly? What are the conditions to make it market volatility?
Talking about it on TV.
Oh, here we go.
Sorry, but
check.
Here we go. Here we go. Done. Check. No, it's true though. There's always a certain amount of market volatility, and how you're exposed to market volatility depends on your portfolio and how you're investing. So some things can happen in media or just in the world in general that create market volatility, but people, that doesn't mean you're exposed to it.
So how can you take advantage of it?
Well, that's actually a great question. Market volatility brings opportunity. Things, because of market volatility, might be artificially priced lower because of a news story or an event in the world. It could be anything of that. A price on something has artificially gone way down, way below what it should be priced at, and that's where your portfolio managers, who are active managers, not mutual fund people or ETFs that just follow the market, take advantage and buy something in your portfolio because it's way underpriced because of market volatility.
Okay, so speaking of that, earlier in the week, we had the story of the emergence of Chinese AI DeepSeek, this AI company, and other stocks really took a tumble. So was that artificial? Was that artificial?
It's kind of artificial market volatility. It really was, because again, that volatility was massive on the NASDAQ. But a lot of traditional investors might not even have many investments on the NASDAQ exchange, which is more of a tech exchange. But you also might not even be exposed if you're more of a traditional meat and potatoes kind of investor. Your portfolio manager is investing in the things that people need, not speculative items. You might not have even been affected by some of those changes. And many people weren't affected, but it creates hype. It creates hysteria, it creates a story, but it also creates massive opportunity.
There you go, people looking for opportunity. Of course, the big story is these potential 25% tariffs coming down as soon as February 1st. What should we be keeping in mind when it comes to that? What are we expected to see?
On your portfolios, I just was in a couple things the other day on this, just getting more information on it for this. A lot of those tariffs won't even affect your portfolio. In Canada, for instance, about 30% of portfolios are in the financial markets, banks, insurance companies, and things of that nature. Well, those companies aren't exporting anything to the U.S., so it's not going to affect that portion of your portfolio. A lot of other things are commodities, and even though they've talked about it, a lot of times when these tariffs have happened, commodities, oil, gas, et cetera, aren't subject to the tariffs, and that's another big portion of the Canadian market. So there's a lot of things in the market that really won't affect your portfolio. I'm not saying that might not affect other things in life, but your portfolio may not even be affected because there's a lot of things that are common. They go up in the States, they go up in Canada. Down in the States, they go down in Canada because they're all related.
And we've been hearing from BC's Premier that people should be looking at buying Canadian, staying in Canada. Are people doing the same with their stocks? Is that something they should be considering?
No, there's a global trading partner. There's the biggest market in the world in the U.S. I said, let your portfolio managers handle that. Again, that's why you want to go with independent, active portfolio managers. Let them find the deals. And you stick to working and looking after your goals and looking after your family and let the pros manage your portfolio.
And let that money grow. Okay. Peter Sashecki with Everything Financial. Thanks for joining us this morning. Good to see you.